Okay, good morning, everyone. Thank you for joining today's webinar, the Financial Links Broker webinar on equipment financing. My name is Juan Cavang, and I am the managing partner here at Financial Links. I am joined today by my colleague, Christopher Held.
Hey everyone, I'm VP of Business Development and head of our equipment financing program here at Financial Links.
Fantastic. Chris will be leading most of the call today. Today, we're going to be discussing what equipment financing options are available in the market today. We're going to talk about some recent case studies and ultimately how to make money offering equipment financing, how to add that to your arsenal of financing. Before we get started, some housekeeping rules. Everyone will be on mute today for the duration of the presentation. We do have a chat feature on here, so if you have any questions while we're presenting, please feel free to add it on the chat. And at the end, we're going to have a Q&A, so I'll try to get to everyone's questions at the end of the presentation. So with that being said, let's get started. Okay. All right. On today, we're going to be discussing a couple contents here. First, who is Financial Links? Who are we? Why offer equipment financing? The ideal client, our equipment programs, and the broker potential earnings, and also how to submit files to Financial Links. First, what is Financial Links? So Financial Links is a platform. We were founded by former bankers. I was a banker for about 10 to 15 years before I started the company in 2019 with other bankers. Essentially, we left conventional banking to find alternative financing solutions in the market. So we started doing this. We started partnering with over 250 now. We're up to banks and financial institutions that offer simplified and creative financing particularly to small business owners and also real estate investors. Brokers utilize the Financial Links platform when they have clients that have a need outside of the product offering. So, for example, if you ideally focus on merchant cash advance, which a lot of people on the call here today, sometimes you want to branch out and offer different products and you don't know how to go about it. So by utilizing the Financial Links platform, that allows you to open yourself up to a multitude of banking products in the market. Financial Links is broken up in 3 financing divisions. The first division is the banking products. Our most popular product is our unsecured bank line of credit, where we find local banks to a merchant that offer unsecured lines of credits with simplified financing. We also, again, we offer real estate financing. So we primarily work with real estate business owners and real estate investors, offering them solutions that are outside of conventional financing. And ultimately, we offer equipment financing. A lot of the merchants that we work with on a day-to-day basis have equipment on there. So they're now leveraging equipment to either get working capital financing, or they're expanding their equipment products by purchasing new equipment. So now we have the ability to offer different products and solutions for them today. So that is Financial Links. From here, we're going to pass it on to Christopher Held.
Thank you, Juan. Just wanted to say again that we're very excited to present to everyone here today. I really appreciate everyone hopping on our call. If you are experienced in equipment already, welcome. If you are brand new to equipment, welcome just the same. So what's the deal here, right? Why offer equipment financing? Why should we care? Why should we learn it? And the answer is because it will pay you for life, all right? You see, our whole goal here at Financial Links is to convert our partners into successful equipment brokers and provide the values that your clients are looking for. Our main interest is effectively to build relationships in equipment that last a lifetime. Throughout our journey to build out our platform here, we've met, onboarded with, spoken with top leaders in the equipment financing space. And the thing that they wanted to impress on us most was that if we stuck to equipment, learned the space, built out our pipeline, it would pay us for life. And that's what I'm really trying to get across today to everyone here on the call. Now, just from our first from our page here, we can easily see the size and scope is advantageous, right? We're at over $1 trillion for the industry. That's 1,000 billion. So just some more context, it would take tens of thousands of years to even count to that number one by one. So there is plenty of business to be found in this space. A number of industries listed here. These are actually the top performing industries in the equipment space, actually in order as well. So I'm sure a number of you are already familiar with or have worked to provide financing previously for these industries listed here. So it should be an easy transition effectively when you're speaking with your current and new clients. We can also see actually through COVID, a lot of supply chains were really beat up actually. But over the past year, supply chains have improved dramatically now. So there's even more equipment available for your current and new clients, for them to purchase, right? So all these things are kind of coming together at the right time here to really get into equipment and being able to offer something more for your clients. Another great reason to offer equipment financing is really the flexibility in underwriting. A lot of lenders, they care more about the assets. So for a broader range of clients, there are more financing facilities to offer in equipment. For example, if they're showing a loss on their financials, maybe they have a lower credit score, it's still possible to work with these clients. As well, I'm not familiar with the average deal sizes for everyone on this call, but equipment is really something where we can reach for the stars, right? The size of the transactions, most of the programs effectively have no cap on the dollar amounts. So really any size we can do here. Again, it says, on the bottom here, can be an annuity. So what we like to do and what we're finding is people in the equipment space are going to transact way more often than any type of conventional financing, potentially that you're currently offering. And every time that client comes back, we're going to, eat off that residual and we'll get those commissions. So kind of similar to an MCA space, you guys look for the renewals, for your partners and kind of maintaining those residuals. Can be an annuity because every time they come back, we're going to get the commission when we finance them for equipment. And over the lifetime of the relationship, you guys are going to find that you're doing a lot more in the dollar size commissions earned with each of your clients. So really something to think about. Let's go to the next slide here. Now we're going to get into how to find the ideal client. Now this is just a snapshot of our application. If you guys are using ours or if you have your own application, things to look at, for your salespeople, just top of the line things that we want to look at, right? Industries that use equipment, i.e. the business type, if we're going to refer to that previous slide, those types of industries, right? That's what we're looking for. Ideally, we're working with clients that have large annual revenues. What I mean by large or larger would be something like 5 million in annual sales and up. That's going to really open the doors for us in terms of what we can offer. In terms of a location, you could think about rural areas. Oftentimes, places like that will have kind of large industrial facilities. A lot of times they'll need equipment like that. If you know specific cities or places where there is a lot of current development, maybe the municipalities are consistently working on upgrading the towns or the cities themselves, also a great place to look. Another thing that we're going to look at is the age of the company. So startups are okay, actually. If they do own a lot of equipment, we are able to work with them, even if it's just a startup. But ideally, a lot of lenders that we work with are going to want to see a couple of years in business. They want to see, the historicals on their financials. It's just going to allow us to get the best offer to our clients. Another good indicator that we're looking for is the company employee size, right? So if it's, it seems like they have a lot of employees. Our example here is 36. This company is most likely going to be working with a lot of equipment and would be a good fit. And then lastly, something we would want to emphasize is the owned equipment value. Ideally for our programs, we're going to want to see $350,000 in terms of an auction value and up for equipment owned. That's just going to be a good start for us, what we're looking for. All right. We can get into the next slide here. So we've essentially broken out our equipment platform into 4 parts. So we're just going to go through all of these. We have our purchase, our sale and leaseback, equipment revolver, and debt restructuring. Going to give some examples and next steps to get those deals done. So let's pop into our first part of our platform here, just a straight purchase, right? This is pretty straightforward. The client is buying new, used equipment, can be from a vendor or a third-party seller. We effectively just need the invoice and or quote on the piece of equipment. A lot of our lenders offer no financials, application-only programs up to $500,000 if the client is showing a 700 plus FICO score. Depending on the client and industry, the lenders may require a full doc underwriting. So it's good to know that up front. For the purchases, we can do up to 100% of the purchase. Typically, the ranges on the terms, I'd say on average, are between 2 and 5 years, but we even have partners that'll go up to 7. For the purchase price, to make it worth our time and ideally when you're talking to new clients, look for a purchase price of $50,000 and up. So I want to get into kind of a recent. Okay, 1 second.
I do want to add that we can do clients that are less than 700 FICO scores. So, but if they happen to have a 700 and above FICO score, we can just do it with less documentation. But we have the ability to also do clients that are, have very little FICO scores, anything 600 or and up.
So for our recent success story, this client was the first example there. This client was an equipment sales and leasing company. They have a lot of clients that are utility contractors. So a good example here is we did 4 JLG boom lift machines. Those are those machines that you see people were, standing on outside of buildings. They're setting up scaffolding or they're fixing like telephone poles and things like that. Well, this client had a lot of financing in place already. They actually had a number of MCAs as well. We were still able to get them financing on those 4 machines. We got them a 36-month term and very, I say a good rate for the type of client. Another thing to note is that we have funded them 8 times in the past year. So again, the residual there, every time for equipment, they're going to keep coming back. We also have a number of out-of-the-box transactions that we're working on. One of our recent funded transactions with an $810,000 yacht. It was a Formula 2017 43-foot yacht. This was actually for a luxury engineer and architect based out of Long Island. He wanted to take out his existing and new clients out on the yacht, so we were able to get that done. I love to emphasize these, I call them fund transactions, because the caveat is every time we fund one of these, we get to go for a ride, right? So if you guys have people in your networks that work with these fund assets like yachts or different modes of aerial transportation, private jets, we'll get it funded. Not only will we get it funded, but we'll have to have a little fun on the private jet as well. So let's get into the, okay, so yeah, I wanted to go over kind of what to expect from a submission. Ideally on a purchase, we're getting a soft offer within 24 to 48 hours. The term sheet, the offer sheet would be sent to the client for them to sign. Sometimes we do require a good faith deposit for underwriting. If there needs to be inspections, sometimes that is in person or the lender is able to do like a desktop appraisal inspection. It all depends on the transaction. Pending everything's good from the due diligence, closing docs would be sent to the client and then we can fund. If everything lines up, we can even get these purchases done in a week's time. It all depends on the transaction and how communicative the client is. Is it from a vendor? Is it a private seller? Is the equipment titled? Is it insured? All these things need to be checked off prior to funding. But yeah, again, very kind of straightforward on the purchases, and we look forward to getting these done with you guys. So now we can go on to our next slide here. So our second facility in our equipment financing platform, it would be our sale and leaseback. This is when a business sells their assets, in this case, their equipment, to a lender to get cash out. The client then leases those assets back from the lender. We can go up to 100% of the auction value or forced liquidation value. Which is nice, something that we want to highlight sometimes in the space. It's really, you're just getting 80, but we can go up to 100. We are looking for annual sales of 5 million plus. This is, this is just going to give us our best opportunities here for sale and leaseback. It does require full documentation for underwriting. We can touch on that at the end here. Up to 36-month terms. Really, the advantages of the sale and leaseback is that it is a fast process to get a large amount of cash for your client. This example here, the client was in agricultural and farming. So we were able to use a great deal of farming equipment to get them 1 million in sale and leaseback. Was able to get a 24-month term and funded within 2 weeks. So what can we expect here for a sale and leaseback? We'll submit a full package. We should have a soft offer within 72 hours. The client would get a letter of intent along with a request for good faith deposit for their due diligence and inspections or desktop appraisals of that equipment. We'll get our final approval. Then closing docs would be issued to the client and we would be able to fund. All right, so we can get into the next slide here. Our equipment revolver. Now, this is different from a sale and leaseback in that the clients will maintain ownership. We're able to get them a working capital revolving line of credit secured by the equipment that they own, up to 80% loan to value on that auction value, okay? But up to 80% of that figure in a revolving line. The clients can use those monies however they want. Which is one of the great advantages. Another advantage here is that because the lender would just place a lien on the equipment, it reports differently to the client's balance sheet as opposed to a traditional line of credit and would not be showing up in their long-term liabilities. It also assists with their bonding capacity. So clients would be able to take on larger jobs as well. So a recent success story here, we worked with a large construction company that focused on foundations. We were able to get them a $2.4 million revolving line of credit, even though they were showing almost a $2 million loss on their 21 return. We got them approved at a 12.75 rate, which is fantastic. These are interest-only monthly payments, a 12-month term. They do go up to 36 months. Sometimes if the whole profile of the client is stronger, we'll be able to extend that term. But the lenders are, very happy with re-upping these facilities at the end of the 12-month term and, extending those terms out when we re-up the facility. And again, when we re-up the facility, we are paid our commission here as well. So what to expect? We'll submit a full package. It does require a full documentation underwriting. We should have an idea within 3 days' time. The lenders will do a basic valuation of the equipment that's being presented. Ideally, we're getting a letter of intent and request for that good faith deposit within a week's time, 7 business days. Once they receive that good faith deposit, they will set up the inspections. Now their inspectors are quick and they can travel anywhere. This is available in all 50 states, just like all of our programs. Expect those inspections to get done within 1 to 2 weeks' time. Then it needs to go to final approval. The inspectors will submit their reports. It will get final approval, and then closing docs would be issued to the client. This the revolver, I would budget up to 4 weeks. Sometimes it can take longer if there are subordinations or if there are other lenders that have all asset liens on any of the equipment that they want to use. It can extend that timeline. But I would budget 4 weeks there. And let's see, lastly, debt restructuring. Now, this is something that a lot of our partners love to do. They're very good at this. Essentially restructuring existing debt into one reduced payment, right? Freeing up cash flow for the business operations. We would want to see annual sales of $1 million or higher for debt restructuring. There are no credit minimums, and often these facilities will go up to 36 months. So a recent success story, and this just goes to show the size that we're able to do here. This was an oil and gas company. Was able to restructure over 200 pieces of equipment. It was about $22 million in loans. Originally, their monthly payment was almost $1 million. We're able to effectively cut that in half, saving them about $5.5 million per year, just restructuring. So huge advantages for cash flow for people in this space. And I would say, oil and gas, if you guys have clients in this space now, let's get these conversations going because we love that space. So what to expect? It does require, another full doc. We'll submit a full package. We should have a good idea within 3 business days what can be offered. We will again get a letter of intent, request for good faith deposit for due diligence, or if inspections need to be completed either in person or via desktop inspections. Then we would, the same thing as our other programs, we would get final approval. Closing docs would be issued to the client, and then we would fund. Now, this debt restructuring, I would say is well within that 2 to 4 weeks timeline. Again, it's just how quickly is the client getting everything that their underwriting is requiring, and then we should be good to go. So definitely, all great things to keep in mind for your clients moving forward here. Now, getting into a lot of why we're here. We definitely want to provide value to our clients, but we also we want to make money and grow with our clients as well, right? So Financial Lynx, for approved brokers, receive a 50-50 commission split for equipment financing. Brokers, everyone on this call, a good range and what they can expect to earn is between 1% and 5% of the loan amount. Commissions are determined before any documents are agreed on, so that would be clear to you guys. Now, most there's the following business day. Sometimes it may be on a schedule, particular day of the week, but we would always be very transparent about that, making sure our partners are paid as fast as possible. All right. And then how to submit. So I just kind of wanted to, on a number of those programs, we said it requires full documentation underwriting. This typically means that the lender's looking for 3 years financials and year to date. That's your, profit and loss, your balance sheet. They're also going to look for a debt schedule, an equipment schedule, your aging AR, aging AP, and personal financial statement. But that's really what we're looking for in terms of a full doc underwriting. But if you guys have any opportunity to discuss, or if you receive financials from a client, please shoot us an email there at equipment@financiallinks.com. We will very quickly let you know exactly what documents we're looking for and would need to provide to get an offer. So yeah, this is it in a nutshell here. Again, we're working to empower you guys, our partners here, to kind of build these relationships and equipment for life. It's going to pay you for life, and we look forward to working with you and to continue to work with you. So thank you so much, everyone, for your time here briefly this morning. I do want to open up our Q&A. So if there are questions, we can pull these up and get them answered for you here. Alrighty, thank you.
Great. Thank you so much, Chris. That was a great presentation. A lot of things to grasp there. What I do want to emphasize here is that we're giving you some tools, some basic tools on what's available in the market. However, please leverage the experts we have here at Financial Links when there's an opportunity. Don't overthink it. Send us the file. Let us take a look at it. Our team of underwriters here will quickly identify if it's a good fit or if it's not a good fit. So please leverage one of your account managers here, as well as Chris, in order when you have particular files in place. We do have some questions. Someone asked if there are some slides that will be available. So we are recording this call, so we will send everyone the recording of the call as well as a PDF of the slides. So if you miss a part of the presentation today, you'll be able to see the recording or get the slides here. We do have a question here. What is forced liquidation value or auction value? So Chris, if you want to talk about that first, would be great.
Yeah, sure. So forced liquidation or auction value, it's, kind of what it sounds like. If the assets had to be forcibly sold quickly, kind of what is that lower kind of end sell price that it would transact at? So I think a good barometer would be probably 30 to 50% of that fair market value is probably where they would land for an auction value on the asset.
Yeah, I want to also add a good example is like a foreclosure on a home, right? So when a bank has to take over foreclosure on a home, typically that home is sold at a discount, right? That's what people want to buy foreclosures. So in the equipment space, what happens is a lot of our equipment lenders aren't in the business of selling trucks or aren't in the business of selling construction equipment. So what they have to do is they have to sell that off as quickly as possible. So there's an appraiser that comes out there, determines what the essential foreclosure or what they can get in an auction, and we're leveraging that number. Now, most of our competitors typically will lend a percentage of that forced liquidation value. So they'll say we can lend up to 80% of the forced liquidation value. The partners we have here can actually go up to 100% of the forced liquidation value. So that's an additional 20% that your clients can earn. Next question we have here is how much is required for the good faith deposit?
That is on a case-by-case basis, as well as the type of financing facility that we're using. For the equipment revolver, it is dependent on, and sale and leaseback, it's dependent on the number of pieces, where they're located, and then we get a request for that good faith deposit. So it is on a case by case basis what that number is.
Great, thank you. We have a question here from Crystal. She has a question about the ideal client. How many employees would you say will be considered an ideal client? So typically, if you think about, let's say a construction company, if you think about a construction company and they put one to two employees, there's not too many people operating machinery, right? So if you start getting into, I would say 10 or more employees, that's when you start seeing a full operation where there's people, maybe, doing some sort of construction, some people and managing operations. So around 10. There's no kind of set number of what the ideal client would be. You just have to think about, a company, how is being run. And typically around 10 employees, you would say you start seeing an operation where there's some people managing multiple pieces of equipment. So that's kind of the number I would kind of stick to. We have another question here. Can you please talk a little bit more about the equipment sale leaseback? What is the limits on the type of equipment, or what are the limits of the type of equipment?
Yeah, I'm happy to talk about sale and leasebacks. There aren't too many restrictions on the types of equipment, as long as we're able to show that the equipment that we're using is critical to the function of the business. Almost kind of no restrictions there on the sale and leaseback. If the clients are doing over that 5 million, and then the equipment is at a dollar amount where the lender wants to make an offer, we should be good to go there. But anytime you have an opportunity, you want to discuss whether or not the asset would be good to go, it's very useful for us if you submit that inquiry to our equipment@financiallynx.com email. We'll get back to you quickly whether or not those assets would work.
We have a question here as, do we offer training? All our account managers are available to speak one-on-one. If you wanted to set aside some time where we can get a little more in depth, we can set up a training. So, the answer is yes. Through our account managers, we do offer training. There's another question here about the copy of the presentation. We're just going to send anyone who accepted the call today is going to receive an email with the presentation and copies of the slides. So just be on the lookout for that. We'll probably send that out possibly tomorrow. There's a couple questions here from Violetta. Does the good faith deposit cover the appraisals?
Yes, the good faith deposit would cover those.
And they said, follow-up question, are the two in the same, or do you do inspections and appraise? So it's either or. So it's either an inspection or an appraisal, not both, right? Correct me if I'm wrong, Chris.
Correct. It would be like a physical inspection, or they're doing like a desktop appraisal.
And what is the typical good faith deposit? I think we answered that before. Is it refundable in full or partially? And what are the requirements to get it funded?
Depends on the facility and the opportunity. So often the good faith deposit can be 100% fully refundable. Sometimes it is not fully refundable and would still need to cover the cost of the physical inspections.
Sorry, one more question here. Does debt restructuring apply to cash advances? Like, are they able to repay the cash advances? And are tax returns required for this. So debt restructuring, most of the times it involves the client has multitude of equipment financing and they want to lower their monthly payment. However, if there's enough equity in the equipment, they can take a cash out portion of it, which can be applied to paying off other debts like cash advances. So it can be used. Where we've done this a couple of times is a client may have a couple $1 million of equipment that they probably purchased free and clear. We go there, we do an appraisal, we find out what's the forced liquidation value of that equipment. Let's just say it's $400,000, and the client has cash advances out. If the 400,000 could cover the cash advances, fantastic. Any excess they will receive in a form of cash. So debt restructuring can involve essentially a cash out of that in order to use that for working capital. And tax returns are typically required for this. The good thing is, like in one of our case studies before, they don't need to show fantastic financials, right? Ideally, we're just looking for the ability to repay the loan in some capacity. So we would, the underwriting team would look through things that they can add back or restructuring to lower the payment to be able to demonstrate that they can afford to pay this. But the answer is yes, tax returns are going to be required. It would be a full package deal just to make sure that everything is in line. Okay. Again, if anyone has a question, there is a chat feature on there. You can ask a question. We have one that came in. What happens if the merchant has an SBA loan, first position, equipment revolver? What if they won't subordinate?
Yeah, unfortunately for the revolver, they would need to get those subordinations because their only ability to protect themselves is by putting that first lien position on the asset, on the pieces of equipment themselves.
And just to add to that, we've had a lot of success. SBA has been a great partner to actually subordinate the equipment portion of the loan. Typically, when someone does an SBA loan, SBA will take an all asset lien. In a lot of cases, we're able to say that we only want release of the equipment or a couple of pieces of equipment, and SBA has been a great partner to subordinate on that equipment. And yeah, can they get a portion of it done? Yeah, again, they don't have to refinance all their equipment. Ideally, we're just trying to get to the number that they're going for, so they can finance a portion of it. And again, SBA can release a portion of the equipment, essentially the ones that we're going to restructure or refinance. Fantastic. So I do not see any more questions. Again, there is a chat feature there. If you have any questions, I'll give a couple more minutes here. This question that came in: what else do you, I guess, finance besides equipment financing? Violetta, yes. In the beginning of our presentation, we talked about some of the other stuff we finance here at Financial Lynx. Our most popular product is the banking products, particularly the unsecured business lines of credits, where clients can get a true revolving bank line of credit with minimal documentation, just an application and maybe 1 year business tax return. We also offer an array of real estate financing, particularly for business owners and real estate investors. So no documentation mortgages for investors, and flip, ground up construction. We have different segments of our industry that's able to finance. So again, banking products, so working capital, you can think about real estate financing for investors and business owners, and of course, equipment, like we talked about today. We do not offer MCAs here. That is not part of our strategy here. And that's one of the main reasons why a lot of brokers in the MCA space work with us, because they know we're not going to essentially cross-sell any products to your clients. Ideally, once you refer a client to us, it does become an annuity to us. If for whatever reason the client comes back and wants to do another equipment and comes directly to us, you will get commissions on that, and you will be notified that the merchant has reached out. So, we built a nice reputation for ourselves. It's been a great partner to our broker channel, and we want to continue to do so. I do not see any more questions here. Again, we will be sending everyone a copy of the presentation along with the slides. So we appreciate your partnership. Thank you, everyone, for joining the call. Be on the lookout. We try to have one of these webinars for each one of our segments every month or so. One more question came in here. Borrow paid comp, and then you get 50% of it. So, or lunch pay. So, for it depends on the product. On the equipment side, the funder or the lender is essentially paying the commissions, and we're splitting that. But on our banking products, particularly on the line of credit, it is a borrow comp paid. There is an agreement that the client signs, and everything is disclosed. So, and Violetta, we would love to get on a call with you, just kind of go over all the programs in full detail at a later time. As I was mentioning, we try to have one of these webinars every month or so. The next one, I believe, is on bank lines of credits and other banking products that are available on the Financial Lynx platform. So be on the lookout for that webinar. That'll happen in probably in the mid to late July. So. But again, thank you everyone for jumping on the call on behalf of myself, Chris Held, and the entire Financial Lynx team here. And I was going to say thank you, but one more question came in here. Hold on. Does the client need to own the equipment outright in order to leverage, or can they have partial equity? You want to take that, Chris?
Yeah. We can use if they have enough equity, we can actually use that to help them get a larger dollar amount on their facility. But really it's for equipment that is owned free and clear.
Excellent. So again, on behalf of myself, Chris Held, and the entire Financial Lynx team, we thank you for your partnership, and we hope to hear from you soon. Thanks again.